This is Acme Solar Holdings. They've reported a 5.2% of an uptick in terms of where their revenues are concerned. EBITDA is up around 11% at 307 crore, while margins is the main focal point. It has expanded to 88% versus 83.6%. Net profit stands at 112 crore versus 44.4 crore. But to discuss more on what is happening with the company and what's the outlook forward for the next fiscal, we're joined in by Nikhil Dhingra, the CEO at Acme Solar. Hi, welcome to the show, Nikhil. I want to understand how the quarter has gone by for you and what has resulted in the strong show that we are looking in terms of where the margins are concerned.
Sure. Right. So the result we did this quarter basically had our revenues coming from 1.3 gigawatt to 2.5 gigawatt. So we actually operationalized a very large plant of 1.2 gigawatt in starting from October. So that has resulted in our revenues going up by a substantial number. The numbers you were mentioning about 10 odd percent, the number is much higher because we had actually a lower adjusted revenue in the previous year because we had sold assets post that quarter last year. So the numbers are quite high because the capacity has gone up by essentially 90% from what we had in previous quarter. So this, when you operationalize a plant, your EBITDA margins go up because your fixed costs are the same. There is this business has operational leverage in terms of the fixed cost not going up in proportion to your expansion in capacity. And of course, in terms of the new asset, it has contributed substantially to the revenues and profits in this quarter. That has resulted in this increase. In terms of the future growth in the upcoming quarters, we are looking to operationalize around 450 megawatts in the upcoming 2 to 3 quarters. So that will, of course, add in a similar way proportionate to the capacity.
Nikhil, you mentioned about the capacity addition which is planned. Can you give us more in detail on what is the route in terms of where FY25, 26, 27 picture is concerned in terms of where the capacity addition is? Your current operational capacity is about 2,450 megawatt. This is in FY25 year to date versus what it was in FY24, which stood roughly around 1,340 megawatt. So just want to understand from here on, what should we be expecting?
Yes. So 2540 megawatt is the current number which we have as of date. So this number will go to around 3000 odd megawatts by June to September in the next 2 to 3 quarters. So that is one milestone we have to reach. And for that, the capex is more than 60-70% done. So it is at the fag end of the capex cycle. In terms of the next stage of growth, we have to execute close to 4.5 gigawatts of capacity, which will come up in phases starting from June of 26 till December of 27. And that is, of course, will come up as per the PPA timelines. So that will take our overall capacity to 7 gigawatts, for which we already have the PPA, the connectivity, and of course, a substantial portion of the land and various other pre-development activities we do on each of these projects.
Nikhil, you mentioned about that already 60 to 70% of capacity is done in terms of where the capex is done. Want to understand what is the capex outlook currently if you take FY24 in consideration, then the IPO which has happened after that. For the next 2-3 years, if you are to see a capex number, what is the number that you have in picture?
So this business is very capex intensive, right? As you know, and of course, for each megawatt you build, you have a capital out of which 75% is funded by debt and 25% is funded by equity. And of course, to do and that debt is around for 20 years. The PPAs are for 25 years. So in terms of the numbers for the capex we need to do to reach 7 gigawatt, it will be in excess of around 40,000 odd crores. And of course, this will be done over a period of 3.5 years. And for that, we have to do it in phases. The first year of a project, basically it's around 2.5 to 3 year life cycle of a project from the bid to the commissioning. So in the first 1.5, 2 years, it's around 20 to 30% of the capex, which is typically done. So and then you do 60 to 70% in the other 2 years, to 1.5 years. So keeping in that proportion, we will target to do more than 10,000 crores of capex in FY26, and that will ramp up substantially as we move to 27 and 28.
Okay, so 10,000 crore is the target for FY26 is concerned. Now coming to the next question is about the under construction capacity. Now 53% of your under construction capacity has had PPAs signed for it. I want to understand, is the company seeing any sort of resistance from the discoms that are there?
Actually, no, we are not seeing much resistance. Just yesterday, we signed a 680 megawatt PPA with NHPC, and that PPA is a very large sort of addition to our portfolio. And in the last 6 months, we have basically signed a very large number of megawatts, upwards of around 1 gigawatt. So we are not seeing that reluctance on behalf of the discoms to sign PPAs. Of course, in terms of it depends on the type of the project, whether it's a peak power project, whether it's a solar project or wind project. And of course, we are relying on our customers, which are these four agencies like SECI, NTPC, NHPC, and SGVN to get this done. So I think they are doing their best, and their performance has to be looked at in the light of the overall large ramp up which has happened in the last 2 years. Because to get the PPAs done for a 50 gigawatt of bids you do is a tough job, and I think they are doing their best on that.
Of course, so that's as to the views on where the PPAs are concerned. But I also want to understand, what is the current bidding pipeline looking like? What are your expectations in terms of where the growth is concerned for the next 1 to 2 years?
So as far as growth in the locked in capacity is concerned, we are fully stocked up in terms of the 27 till 27 28. We had to have the projects to build. So we don't need to go out and bid for the numbers we are trying to achieve in 20 until 2028. So what we are now trying to do is look at capacities where we are profitably making our returns for the 28 to 2030, because our target is to reach 10 gigawatts of contracted capacity by 2030, installed capacity by 2030. For that, if we need to install it by 2030, we should have the contracts in place at least by end of 2026. So in the next year or so, we'll try and achieve this, let's say around in the next year and a half, we will try and win around 3 gigawatt more of these tenders profitably, such that we can execute them from 2028 to 2030. Because in our business, the phasing of business is very important in terms of once a project gets commissioned, you get a lot of leeway in terms of the accrual generation. So we plan our ramp up also keeping in mind the upcoming commissioning of our under construction projects.
Okay, and Nikhil, are there any plans to expand into wind and hybrid segments? You're currently fully operational in the solar operational capacity. So, want to understand that, is there plans for expansion in terms of where these two other segments are concerned?
Yes, of course. In terms of the operational capacity, you are very right. We are 100% solar as of now. We pivoted to hybrid and FDRE project, peak power projects around 2 years back. So in terms of our under construction pipeline, we are actually quite heavy on those projects you spoke about, the hybrid and peak power projects. So our first wind plant is shortly expected to commission. That is part of the 450 megawatt I spoke about. So that is the capex for that is around more than 80% done. So then starting June 26, whatever is getting commissioned, it has a very high proportion of those peak power and hybrid projects. So when out of the 7 gigawatt overall capacity by 2028, more than 50% of it is having components of wind and battery.
Okay, so that's the plan outlook for where the other two segments are concerned. But my final question to you is on the debt reduction. We've already seen about a 21% of a debt reduction. What is the plan? Is there a particular target in place of where the debt is concerned?
Yes, yes, we do have a target, and ours is a very capital hungry, and so we need to be very capital efficient in terms of our performance. So the plan is that at any time we will not cross a debt to EBITDA of more than 5.5 on an operational asset basis. So that's the cap we have internally and agreed with all stakeholders. Right now, we are much below that cap, and of course, we will always try to do that. So basically, if you put your assets with the targeted CUF, which you have estimated, right? If you are within the plus minus 5% range, then you are well within that. And we have done that for all of our projects so far. That we try and have the debt to EBITDA range of within 5.5, because the debt is 20-year debt. With a very elongated repayment cycle, because of the strong nature of cash flows coming from a AAA counterparty. So you do have that long period of your contract with guaranteed payments. So that's where this threshold will be. And in terms of absolute number, that will keep on varying, because depending on the capacity you have got commissioned in that year and at that point of time. But we can always tell you in terms of the ratio, that is the ratio we are trying to keep at all times.
Well, thank you so much, Mr. Dhingra, for joining in and sharing your outlook on what is the future for Acme Solar. Once again, thank you so much for joining into NDTV Profit.